I'm not saying there's no leverage. I'm just telling you that the retail, you're talking about retail people buying on leverage, you can measure that very, very easily, right? That is something that is available. The stock market is at all-time leverage, right? The leverage in the stock market is the highest it's ever been in history.
Yeah, look, the stock market's a bubble too. I'm not going to deny that.
That's a bubble of hundreds of trillions of dollars.
The stock market is overvalued.
Does Bitcoin have intrinsic value?
So just like gold and just like the dollar, Bitcoin derives its value from the fact that other people derives value to it, or it has certain value. Gold has zero value. Okay, yes, you can use it in jewelry, and you can use it to build high fidelity electronic equipment, but that doesn't mean it has any value. So the point is, since all the value is derived from the fact that all of us vote with our pockets for gold, dollars, or for Bitcoin, and the vote has been casted over the last 13 years, there's no argument about which one of these assets is the one that people trust, right? Or at least the people who decided to migrate their dollars from the fiat system. So we're not talking about a hypothetical. We're talking about $3 trillion that migrated from the fiat world to the crypto world. And since we all vote for it every day, right? We vote to hodl, we vote to basically not use the Bitcoin as a form of payment. We only use it as a form, as a store of value, right? Again, the dollar is a phenomenal form of payment, but it's a horrible store of value. Bitcoin is exactly the opposite. It's a mirror image. It's the other side of the coin, because it's an exceptional store of value, but it's a bad form of payment.
Liz, I would keep people in the very short end. I really do think there's duration risk, and whether Peter's right or wrong, nonetheless, there's certainly an argument to be made that 10 years could go to 3.25%, 4%. I don't think they're going to go to Peter's 8 or 9% that he's talking about. But nonetheless, I think short treasuries, I think short corporates make a lot of sense. You can get 3, 4, 5%, and I think that protects you and keeps you out of trouble.
Peter, where does it work to put your money? You have been a gold bug, but you also have other opportunities that you see. I mean, what should investors be looking at the moment from your perspective?
Sure, gold's a part of my portfolio. It's a small part because it's savings, it's a store of value. Most of my money, personally and for clients, is invested in dividend-paying stocks. I don't like fixed income at all. I agree that if you're going to do it, don't go out on the long end, because that's where you're going to get killed. But even in the short end, you have inflation risk, not as much interest rate risk, but inflation is going to erode away the value of your principal. I own a lot of stocks, mostly outside the United States. I own some companies in the United States, mostly energy companies, but I own stocks that pay me dividends of 5%, 6%, 7, 8%, sometimes 10%.
Well, look at, the Euro-Pacific International Dividend Fund has a very good 3-5 year.
Yeah, I would much rather get dividends from companies than clip coupons on bonds, because the companies that I invest in sell products that people have to buy, not the ones that people want to buy, because they're going to stop buying those. The ones they have to buy, and they'll pay higher prices, and then I can get higher dividends to stay ahead of inflation.
So, Brent, in your argument, you say, okay, if the United States is doing that, then Japan, China, Europe, they're in a desperate situation where they would have to do more of that. And then Peter's point is that even if they did, that wouldn't necessarily tank their currencies, because they have this fundamental strength that they are an exporting nation. They produce more than they consume. And then your point was, well, that is true currently, but if the United States goes into recession, then that's going to take out their only customer, or one of their main customers. And I think you would also argue that then the United States is exporting fewer dollars to service global dollar-denominated debt, which makes demand for dollars outside of the United States increase significantly, the supply go down, even though we're seeing massive amounts of maybe consumer price inflation in the United States. So